Hi, in this video I'm going to explain the trading setup I used to turn $130 into $4,000 in 2 weeks using funded trading. This is a base breakout early entry setup. Um, it's a momentum trader type setup. In this video I will explain what a base is, what a break point is, what an early entry point is, the purpose of the 1.618 in this setup, and explain the purpose of the ATR in this setup. So I will start off just explaining what a base is. A base is a common price action pattern that happens when assets are consolidating. Um, Well-known bases are like head and shoulder, inverse head and shoulders, double bottom, cup and handle, etc. I don't worry about the exact pattern. I more so worry about the price action um, within the pattern. Um, and then a breakpoint is the clear high of a base. So here we had a rally and price started to consolidate after the rally. And here we come down and we crashed very hard and we rallied up to this point and got rejected um, before getting over it. Come down once again and get rejected at this point once again. So it's a clear indicator that for this consolidation pattern, this is the high. It doesn't matter if it's wick or candle. It's basically the point that rallies are getting shut down at, the highest point. Um, and then I will explain the early entry point now. So an early entry point is the highest or the closest identifiable SR zone to the break point. Here on Sol, it's very easily identifiable, but I'll give a little. This will help you identify the proper early entry point. Here you could draw one on these two wicks, but it is very low volume. The price only reacted around that zone twice. Um, but this early entry point is much more volume. Um, if I pull up a fixed range volume profile and go through this base, as you can see here, there's a big chunk of volume right here and not very much up here. I don't ever use this, but it's just a good way to explain my point of where to put your early entry point. So on the early entry point zone is just like in the name, it's the point to enter early on the base breakout. You can enter on top of the zone, in the middle of the zone, on the bottom of the zone. Doesn't matter. It affects your R, of course. Say I entered on the top of the zone on this trade. If I entered on the bottom of the zone, it would be 17.4 instead of 9.2. The proper way to do it is enter a portion at the top, and if it comes down to the bottom, enter a portion down there as well. I will now explain the ATR, which is something I use to increase the probability of the trade being successful and the timing of the trade being successful mainly. So the ATR is a tool used to measure volatility. It measures its full name is the average true range. It measures the day's trading range. So here on this day we started at $87, let's say, and we ended at $92. So that's a $5 trading range for that day. This has a 14 period length, and I use the EMA. So as we can see, price is decreasing and ATR is decreasing. Um, this continues until there's a shift over here where price begins to rally whilst ATR is decreasing. And it continues to do so up into the base high, which is absolutely amazing. The ATR isn't needed for this setup, but it increases the probabilities by 20% at least. It is a amazing thing to see. When I see something like this, I run into the trade. The last thing to explain is the 1.618. The the one I use the Fibonacci retracement 1.618 for my target from the base because I believe it's the best way to get a target from a price action pattern. The way it works, and I'll show now, is you get the tool, you draw it from the high to the low, and the whenever price breaks from this high, um, I draw it from the break point as well, not the local high. I could draw it up here, but it would mean nothing until this high was broken. So I draw it from the break point. When it breaks this high, this break point zone, this high, um, it is probable, 60% plus, that it will run up to the 1.618 Fibonacci impulsive wave point. Um, so I love to use it as a target to either take off the majority of the trade or just a portion of the trade, 25% or 50% of the trade. Um, Now I will explain the stop loss. That has the target covered. Um, Actually, I'll explain this as well. For targets, I sometimes will take off a portion at uh, clear mid zones like this. That's a very clear mid zone where price was getting rejected because we totally could come up into that zone and see way more consolidation. So it's always great to take profit, take partial profit, and set your stop loss in a profit. So if you get stopped out, you have profit from the trade and can be ready for the next trade. Um, Now I'll explain the stop loss. You want your stop loss to be tight, but with enough margin under the early entry point to where if price wicks down quickly, um, it won't hold the zone and you get stopped out, most likely. Now, if I place it like this, there's let's say there's an 80% chance if it stops me out, it's going to go down. Because there's always a chance that it just wicks down and then comes right back up and your stop loss is invalidated. But yeah, that's basically the setup. It's a tight stop loss, high R setup. You can use this on crypto, indexes, individual stocks. I haven't used it on Forex or commodities. Thanks for watching the video.